Hi there, QuickBooks experts. I hope all is well, and I pray that as you are viewing this video, that you're in the best of health and spirit. In this video, we're going to cover Chapter 10, Preparing Financial Statements and Reports from QuickBooks Online for Accounting 2026. Upon completion of this chapter, you should be able to know how to create an income statement, a balance sheet, a statement of cash flows, an accounts receivable aging summary, an accounts payable aging summary, create an inventory valuation summary, and lastly, to know how to customize and save reports. In Chapter 9, we added adjusting journal entries to our Wild Water Sports company. So we know that before financial statements are issued, companies need to prepare the necessary adjusting entries to ensure that the numbers that are provided are accurate, because we know in financial accounting, externally, stakeholders, investors, lenders, they're using these financial statements to make decisions. So with these adjusting entries, we have what are called accruals, we have deferrals, and we have depreciation and other adjusting entries. So with our accrual starts with the letter A. After also starts with the letter A. So whenever you think of accruals, I want you to think of after. The exchange of cash happens after. So as it relates to accrued revenue, that simply means that we've earned the revenue, we provided the service or sold the product, but the customer is paying us after. As it relates to accrued expenses, we incurred the expense, we used up the phone bill, we ate the food, we used up the supply, whatever it is, and we are paying for it after. On the flip side, we have what is called deferrals. And deferrals, that is essentially where the exchange of cash happens before. So the customer paid us before we provided the service, before we sold the product. We pay for the expense before we actually incur, consume, or use up the expense. And then we have depreciation. As it relates to depreciation, in accounting, it's not necessarily a reflection of the decline in value of an asset, but it is essentially a process to allocate the cost of an asset over its estimated useful life. So that's very important. So let's say we purchase a laptop for $1,000 and we anticipate that it's going to last 4 years. So simply stated, we take a depreciation expense of $250 each year over the next 4 years, but that computer can very well last more than 4 years. All right. So moving along, we have 4 standard reports that exist in financial accounting. We have the income statement, the statement of stockholders' equity, the balance sheet, and the statement of cash flows. QuickBooks Online does not have a report for the stockholders' equity. It does have the others. There's the income statement, the balance sheet, and the statement of cash flows. There's also a host of other reports that you can utilize to understand the underlying business events that have occurred during the particular accounting period. At the very least, we know that it's for a year, but it can be for a week, for a month, for a quarter. You will be exploring the accounts receivable aging summary, the accounts payable aging summary, as well as the inventory valuation summary reports. We'll also learn how to customizing by adding columns, and also removing cents. So jumping right in this section, we're going to create what's called an income statement. So these terms are used interchangeably. You might hear the income statement, you might hear the profit and loss, pretty much means the same thing. So as accountants, we hear the income statement, but when we think about the ecosystem of QuickBooks, it's not just used by accountants, it's also used by business owners. And to make it easier for those business owners to understand, profit and loss is more understandable to the common everyday user. So with that being said, Intuit decided years ago that instead of referring to it as the income statement, as many accountants learn in school, they refer to it as a profit and loss report. So again, this might confuse an accounting professional or accounting student, but the key thing is it resonates with business users that use QuickBooks Online. And this report is designed to communicate the revenues earned. So again, revenue that relates to the services that's being provided by the business or the goods that are being sold, and expenses incurred, because remember, in order to make money, you have to spend money. So with that being said, this profit and loss, it reflects the profit or loss over a month, quarter, or a year. So Intuit defines this report as follows: shows money that you earned, income, and money that you spent, expenses, so you can see how profitable you are. So for someone that does not have an accounting degree, no accounting background, this is very straightforward. So it's not exactly how an accounting professional or accounting student was taught, but it's close enough. Accountants define the income statement again as a report that reflects revenues less expenses to derive at income. So same thing, it's just that the wording is changed around a little bit for simplicity. So we're going to open our internet browser. I already have mine open. And we're going to go to our reports. I am already here. And we're going to go to our profit and loss. So you can just click on it. Typically, you'll see it listed here in the favorites. And then you also see it here in the business overview. So we click on the profit and loss. You can even type it in. Again, there's a myriad of ways to do the same thing in QuickBooks Online. So we go to our profit and loss. And we're going to run it for January 1st, 2027 through January 31st, 2027. And then we scroll down, we see the report. So we see ultimately we have net income of $180,719.22. So here's asking us to kick the collapse. If you scroll up, we can collapse it here. So that way we don't see the headers anymore, and we just essentially see the report. And by defining the accounting period as the month of January 2027, the only things are transactions that we will see reflected in this report is for January 2027. So anything that happens in February or anything that happened in December of 2026, we will not see that information. So all reports in QuickBooks Online that allows you to drill down to specific transactions recorded in that period. You can drill down by clicking an account on a report, and that reveals the transactions report for that specific account. Double clicking a specific transaction report reveals the specific source document, and this can be an invoice, a sales receipt, cash receipt, bill, or even a journal entry. So here it's asking us to click the 337,000 we see in sales. So we click on that. And then now here we see this transaction report. So with this transaction report, we see there are some sales receipts, some invoices, and journal entries. And it's asking us to click on performance rentals for invoice 1002. So if we click on that, here this links us back to the actual invoice. So if we close out of this, we go back to our report summary. And now it's teaching us how to customize this report. So it's asking us to click the drop down arrow to compare. So if we click on compare, and it's asking us to select the percentage of income. So we have time periods. This is if you want to compare it to the previous year, the previous period, year to date. And then here you can do it as a percentage of the row, column, expense, etc. So in this case, we're going to do a percentage of income. So we're doing a vertical analysis in this case. And then here is, some things, QuickBooks is continually changing. It says click customize, but what we'll do in order to show it without cents is you'll select general options and you'll select round to the nearest whole number. And that essentially gets rid of the cents. So I'll show you before we click on this option so that way you can see the change. So here we see the cents payroll expenses, a great one. It shows you $10,930.78, but we want to show it without cents as it's shown here with it being rounded. So therefore we click on general options and we select round to the nearest whole dollar. And then once we click on that, we scroll down and here we see the report appears the same. So next it wants us to click save customization. So we select save as. And then we have profit and loss custom. And then we select save. And then here it's asking you to click the export button and then export it to Excel. So you have those options. You can export it to Excel, export it to a PDF, and export it to a CSV, which is also another form of an Excel template. And then after you can save it, you can specify where you want to save the Excel worksheet. And then once you open the Excel file, you'll have to click enable editing. So all of these different things just teaching you exactly how you can export. So again, you have these three options, Excel, PDF, as well as CSV. So now we move on to the balance sheet. In this section, we're going to create a balance sheet that reports the company's assets, liabilities, and stockholders' equity as of a specific date, not necessarily a period. So the balance sheet, this tracks all of the assets, liabilities, and stockholders' equity from the inception of the company, from day one. So sometimes, especially accounting students or sometimes even accounting professionals, I mean, I've been there before where I couldn't remember, which accounts impact which financial statement. So for me, one of the ways in which I remember which accounts are reflected on the balance sheet is I think of ALOE. So my family, they're from Guyana, the Caribbean, and typically, well, depending on who you're talking to, some people might say Jamaica, Guyana, sorry, is not in the Caribbean. But anyhow, right? So with that being said, my family's from Guyana, and I remember being younger, and my mom used to make me drink and eat aloe vera, whether it's being blended within a juice or having to just actually eat the pulp, and it's very bitter, right? But one thing that I've come to learn is that bitter things, it's good for the blood. It helps to clean out, it helps to balance out the blood. So for me, the way that I think, I use mnemonics. So whenever I think of aloe or I think of the balance sheet, I think of aloe. It was bitter, but I know that it was good for me. It helped to balance out the blood. So aloe stands for assets, liabilities, and owner's equity. Owner's equity, stockholders' equity is all essentially the same thing. The only time that it changes and when you're dealing with the different business structures, sole proprietorship, partnership, etc. But all of it ultimately still refers to the owners, those who own the business. So balance sheet, you think of aloe. So when we create this report, QuickBooks Online is going to provide us with the ability to define the period in which the underlying account balances are going to reflect the transaction. So we continue for where we left off. We go back to our reports, and then we click on our balance sheet again. Typically, it'll show under favorites. It can also be under business overview, or you can type it in, whatever works best for you. So you start to input the information, and we're going to do it for the month of January 1st to the 31st. And then we run the report, and then we collapse it. So we're going to make this a little smaller. All right, so as we look at this report, here we see that we have our checking account, we have accounts receivable, and everything ties. We have our total assets of $823,753.88. So it's asking us to click on the accounts receivable balance of $120,770. So we click on this. And then it's asking us to switch to the classic view. But if you go back to the summary report, again, there have been several changes with QuickBooks. So if we switch to the classic report and we just change the dates, you'll basically get the same thing. All right. So again, with the QuickBooks, there have been several changes. That's why some of the things might not necessarily follow the same order. So here we see, we clicked on it, switched to the classic view. And then here we see the transaction summary for January 2027. And it's asking us to click on a $70,000 payment from Refugio. So we click on that. And then here we see our received payment for the $70,000. So we click out of this and we go back to our report summary or summary report. And then we click customize. But again, this is if we are using the classic version. So if you're using the classic version, that is where you will see the customize. But in this case, where we're using the modern version, so if we go back to report list, oh, sorry about that. Let me update this. All right, so when you're using the modern version, things look a little different. So as you see in this modern version, we don't see customize. Instead, we go to general options and we select round to the nearest whole numbers. So just keep that in mind. If you're using a modern version, in order to get rid of the cents, you go to general options, you select round to the nearest whole number. If you decide to switch to the classic view, then from there you select customize and you select without cents. All right, so with that being said, dropped off. Let me just go right back. Give me a second. All right, so the next thing it's asking us to do is to click the rows column drop down arrow and then change the column's text. So we want to make the percentage of column. Sorry, so this would be under our compare, and we would select the percentage of column. So in such case, the changes, instead of clicking the rows and columns, what you would do is select compare. And once you select compare, you select percentage of column. And then once you run the report, we essentially see it like this. And let me just update this so that way the numbers match. All right, so just by making that change, we see that now there's the update. So it shows 12%. And then here, this is a, let me just run this. All right, perfect. All right, so here we see the percentage of column is off by a few cents due to the rounding. All right, but the key thing is everything adds up to 100%. So the next thing you would do is save the customization, and the title is balance sheet custom. Then from there, you save it. And then this is essentially just going through the steps again, whereby you export it. So you can export it to the Excel, you can save it with the proper name, and then you enable the editing. So this is more so just showing you how you will save the report in Excel. Next, we have the statement of cash flows. And in this section, we're going to create a statement of cash flows, which reports a company's operating, investing, and financing activities. So as we've learned previously, the operating activities for a business, this is essentially their day-to-day operations, the things that they do, the services they provide, the products they sell to generate revenue, and then any of the expenses that they incur within the normal course of operations. Then we have investing activities, and this is essentially where the company is spending money to purchase long-term investments, so property, plant, and equipment. And then we have financing activities. This is how the company finances, for lack of a better word, or funds their activities. So for a corporation in particular, a corporation, they issue stock, which represents ownership in the corporation, or they borrow money from individuals and corporations, which takes on the form of bonds. So we continue where we left off. We go back to our reports. And then now we go to our statement of cash flows. So here we have our statement of cash flows here, and you can also type it in. So we go to our statement of cash flows. It's going to be the same time period, January 1st, 2027 to January 31st, 2027. And in here we see that cash at the end of the period should be $169,358.88. So we scroll down to the report, and then we see the common stock amount, common stock under the financing activities. And then from there, it's instructing for us to switch to the classic view. But here we see the same thing. And then we click on a $10,000 deposit. And then this essentially shows us the deposit that was made. The deposit from WB Investments, the account was common stock. So we click off of this, and then we can customize. And again, this is if we are using the classic view, we'll customize it. If we're not using the classic view, you use the modern view. You select general options. You select round to the nearest whole dollar. Do this here. We round to the nearest whole dollar. And then here we see that the numbers are essentially rounded. So from there, we save our customization, save as, statement of cash flows, custom, and we save it. Then again, if you want to export it, as you know, you have these options: export to Excel, PDF, or CSV. And now we move on to some reports. We just looked at financial statements, but now we're going to look at some of the reports that QuickBooks Online can prepare. So in this section, we're going to create an accounts receivable aging summary. So with accounts receivable, that is essentially you provided a service, you sold the product to the customer, and they did not pay you right away. That's simply what accounts receivable is. So accounts receivable aging summary is going to reflect unpaid invoices for the current period for the last 30, 60, and 90 days as of a specific date. These aging summaries, they help with finding customers who may be delinquent in their payments, and it helps a company estimate the need for an allowance for uncollectible accounts. The aging information, it needs to take into consideration the company's normal terms for a customer. So for example, it would not be an issue if a lot of customers, they're in the 60 plus category if the normal terms for customers is 60 days. However, in the event that you typically give customers 30 days and there are customers whose receivables outstanding for 60 or 90 days, that could potentially create a problem. So we go back to our reports and we type in accounts receivable, or even if you start to type in accounts, then you'll see these pop up. So we click on our accounts receivable aging summary and we type in our date as of January 31st, 2027. And then now we see Florida Ski School owes us $2,000 and Performance Rental owes us $118,770. However, they are current. It's not between the 1 to 30 day, 31 to 60, 61 to 90, and 91 and over. So they are current. So we click on the 118,770 owed by Performance Rentals. And then here we see the invoice. So we click on invoice 1002 and it basically shows us the root, the source of this accounts receivable that's outstanding. So we X out, we go back to our summary report, and that is how we prepare an accounts receivable aging support. So, as a business owner and entrepreneur, I can attest that having an accounts receivable aging summary is very helpful. Why? There was a season of my entrepreneurial journey where I would forget to send invoices to customers. And now I have to tell myself, oh man, it's been too late. I can't send this customer an invoice after a year, after 6 months. So having this tool at hand, it definitely helps to make sure that you're accurately tracking what customers owe you and being paid for the work and the services that you provide. So definitely a powerful tool. But here's the thing. If a company does not record the proper invoice, then they won't even know that a customer owes them. So very important. There are layers to it. And as an entrepreneur, as an accounting professional who's providing services to business owners, you want to make sure that there's a proper process in place for tracking accounts receivable. Next, we have our accounts payable aging summary. So this is simply the reverse. This is where a business, they receive services or products from a vendor, a third-party vendor, and they owe them. They get it on account. So in this section, we're going to create an accounts payable aging summary, which reflects unpaid bills for the current period and for the last 30, 60, 90 days as of a specific date. These aging summaries, it helps to prioritize the payment of bills. Aging information, it needs to take into consideration the company's normal terms from a vendor. So some vendors might say, hey, pay us within 30 days, 60 days, 90 days. So it is very important to know what these terms are. So we're already in the reports section. We're going to type in accounts. We go to our accounts payable aging summary, and the date is January 31st, 2027. And then here we see that we owe Allstate, Best Buy, Geek Squad, Malibu Boats, and Tig. In total, we owe $190,250, but we are current. We're not within the 1 to 30, 31 to 60, 61 to 90, 91 and over. So we're pretty much in good shape. So we click on the $6,000 for Best Buy Geek Squad, and this shows us the bill that was recorded that lets us know that we owe them this $6,000. So we click off of that and we go back to our summary report. This is also very helpful because a lot of times before lenders, they extend money to a company, they want to know, what are the current liabilities? Are they current or are they past due? These reports are very important to help to showcase the ability for a corporation to be able to pay back their liability. So kind of like a credit score, when you really think about it, are they trustworthy? So next we look at the inventory valuation summary. In this section, we're going to create an inventory valuation summary that reflects each inventory's items quantity on hand, the average cost, and the resulting valuation of a specific date. So when we think of inventory, inventory does not just represent, supplies that a company has. The key thing with an inventory, that is essentially inventory or assets rather that the company has that they purchase with the intent to resell it. So we have what's called manufacturing businesses and we have what's called merchandising or retail business. So for manufacturing companies, these are companies that they have raw materials and they take those raw materials and they put together a finished product. So think about it like a company that manufactures computers or a company that manufactures bed. They take the raw materials, they put it together to make that bed, versus a company like IKEA or Best Buy, who they purchase the finished product. So this is the difference between a manufacturing company who takes the raw materials and puts it together, converts it into a finished product, and then merchandising companies that buy the finished product with the intent to resell it. So for manufacturing companies, their inventory falls into three categories. They have raw materials, the materials that are still sitting in storage. We have what's called work in process or work in progress inventory, whereby the materials are in production, but it's not yet finished. And then we have finished goods inventory. So that's for a manufacturing company. Next, for a merchandising rather, or retail company, they just have one inventory category and it tracks all of the finished goods that they purchase with the intent to resell it. So we're already in reports. We're going to type in inventory and we click on our inventory valuation summary. And this is going to be as of January 1, 2027 to January 31st, 2027. And then when we click on it, we see the different inventories. We have the Centurion, we have the Malibu Sportster, Malibu Sunset LX, the Tide 25, we have the Tide Thruster, and the Wake accessory package. So it's asking us to click on the 5 representing the number of Wake accessory packages. So we click on this. And then from there, we view the inventory valuation detail report. So we look at the starting value, and then we see the bill whereby we purchased 5 of these packages from Malibu Boats. So we click on the bill and it basically just takes us to the source document. So again, all of this ultimately ties down to the reports, or to the source documents rather, that generate these reports. So the reports that QuickBooks puts together, it's only as good as the accounting system that is put in place to accurately analyze and record the transactions that take place. So we click on cancel and we go back to report and we can save it as our inventory summary as a custom report. So this brings us to the end of chapter 10. In this chapter, we didn't add any business events, but we created the basic financial statements, the profit and loss, the balance sheet, and the statement of cash flows. And in addition, we drilled down beyond these reports to transaction detail reports into source documents, such as payments, invoices, bills, etc. And we created some analytical reports in order to learn more about accounts receivable, accounts payable, and inventory. So this brings us to the end of chapter 10 for financial statements and reports.